this session, what we're going to be talking about is where is the Federal Reserve regarding interest rates in light of the recent FOMC meeting, which just finished this last Wednesday, and Jerome Powell stating clearly what the likelihood is of reduction in rates. Remember that when you join this channel, you can also get access to VIP mentorship groups, to workshops on all types of assets, whether options, stocks and shares, commodities, crypto, FX. I've got 3 books, 4 books now on Amazon, writing another one. And you can also join and any of the individual workshops you want to be trained in. That's what we offer here at Driving Markets. So let's just kick off with what's really happened in the past week. So the big event this week was the Tuesday-Wednesday Federal Open Market Committee meeting where they decided not to raise rates. It was pretty odds-on favored that they're not going to raise rates as far as the US is concerned. Remember, the US being the #1 leading economy, what you do have is that is going to be guiding all the other central banks as to which action they're going to be taking when it comes to interest rates. So the post-meeting statement by Jerome Powell on Wednesday stated clearly that they're unlikely going to be raising rates. Now that's a bit of a surprise comment, considering that if you just rewind the video back to November, December, January, February, the markets were expecting 6 to 7 rate reductions throughout 2024, around about 250 basis points to come off the standard rate. Remember, the rate in the US is running between 5.25 to 5.5%. So they're expecting 250 basis point minimum reduction in 2024, and that has not happened so far, and highly unlikely that's going to happen the rest of the year, considering we're already in May and there's been no rate reductions whatsoever. So what Jerome Powell stated is that unlikely they're going to be raising rates, and the next move likely is going to be down. With that statement, the stock markets shot up because they're looking for cheap money. But it is a bit of a strange response, considering that they ain't going to get 6 to 7 interest rate cuts in 2024. We may get 2, one probably in June and the next one probably in August, maybe September. Any later than that would be considered election interference in the US. But considering that what Washington has done and the Fed have done over the last 2-3 years is pretty much heavy interference in making sure that the economy is driven towards the democratic progressive narrative. So saying that to expect interference or not expect interference is probably a remote chance. They probably will have some sort of interference in the election. But going back to the rates in the US, so rates will come down slightly. Stock markets have gone up. They haven't yet surpassed the highs where they were in February and March, but they are trending up a little bit, looking to go higher on the back of cheap money. That brings into focus what else happened this week. Well, Apple came out with a pretty poor results. Their sales have dropped 10%, but yet they balanced that with a statement that they're going to do a $100 billion share buyback. So the shares went up on the back of that. If they didn't do that buyback, what would have happened is those Apple shares would have trashed. And Apple itself is now become non-innovative. So Apple has not really produced any innovative items or IT or material or products since 2012. What it's done is refurbished, it's reclassified, it's added on a camera, added on certain characteristics to its iPhones, but not really come out with anything innovative. So Apple itself is cash cowing, which is using its existing customer base, its existing client base in order to make money. And that is a concern for a global company. However, they are somehow seem to balance the books and do all these type of tricks to make sure that the shares do stay high, but Apple itself is a bit of a concern. Crypto took a big battering this week. Bitcoin went all the way down to around about 51,000 before jumping up to 57,000. Again, post-halving of the 19th of April, we're not too sure where Bitcoin is going to go. My personal opinion is that Bitcoin is going to go to well above 100,000, even more towards the 150,000 in the next, I would say, 2 years, year and a half, 2 years, you could see Bitcoin definitely jump up to 150,000 in the next 12 months, or even by the end of the year, I could see it at 75,000, 80,000, or even higher. So Bitcoin, as far as those crypto traders are concerned, in my opinion, is a good long-term investment. Overall, oil came down a little bit. You got a little bit of pullback on oil. Why? Because there's slightly less global pressure when it comes to Middle East tensions, but that is going to kick off again because Israel is going to attack Hezbollah, or sorry, the war between Hezbollah and Israel is going to escalate to the level of a full-scale war, simply because Israel has evacuated over 85,000 residents from the north of Israel. That's an untenable, unsustainable amount of pressure on the country, and therefore they're going to have to clear the border with Lebanon from Hezbollah in order that those residents can return in safety. So there is going to be an escalation. Remember, Hezbollah is a number one proxy of Iran. So behind it is Iran. That is going to push up oil and potentially push up gold. Going on to gold, where gold itself is running at around about the 2,300 level, seems to have capped out at 2,400. It needs to break the range either way, either downwards or upwards, and at the moment it's stuck right in the middle. On the foreign exchange fronts, look at Bank of Japan and look at the yen. So dollar yen went to a super high level of 160, pulled all the way back to 153. Is there going to be Bank of Japan intervention in the Japanese currency and overall in Japan? Japan has a major problem, because if it does raise interest rates, then the biggest holder of government bonds is the Bank of Japan, so their net assets are going to fall, and that's going to cause a whole cycle of monetary calculations that have to be redone if they raise rates in Japan. So it is quite a difficult scenario as far as Japan is concerned. Unemployment is going to rise in the US and will continue to rise in the US, especially amongst the high-tech sector with more and more layoffs. However, because Biden wants to get back into the White House, or the senile old age home, White House care home, what's likely to do, they're likely to continue to manipulate the numbers, or try to manipulate those numbers up until the election. And if there is going to be a stock market crash, which I believe there is, then they're probably going to try and wait until Trump gets in and then blame Donald for that major stock market crash, saying, oh, look what the Republicans have done, look what Donald's done, it wasn't like this when we were in power, etc., because Joe Public doesn't understand the mechanics of what's going on regarding financial markets. I'm running a workshop on options on the May the 5th. I'm also be running some beginners courses on how to trade. If you want to join those as well, you can text me. You can also join up, subscribe to the channel. I also have got a VIP mentorship group that you can join as well. There we've got six senior banking analysts from major top tier banks that are on the group, and it's a bit of a VIP boutique operation. But if you want to join that as well and get a lot of input and trading in Zoom calls, join that as well. That's it for now. Hopefully you've pushed that subscribe button. If you need any more information, you can comment, you can join Instagram, where you can DM me and get a direct channel of communication. And that's it for now. Have a great day.